couple of years back, he told us Sensex 1 lakh. And we are at 80,000. We've bridged the gap. So we need a bigger target. When you come up closer, you need a bigger number. So
you give me longer way. I mean, what is happened after 10 years? I'll give you a much bigger number. So it's just a compounding. See, I started my career when it was 100.
Yeah.
So in 1980 only I bought my first stock, and that time Sensex got started 100. Today is 80,000. Do you know what is the rate of compounding in 44 years? Guess.
20%.
No. This is what is all about compounding. It's 16.4%.
Yeah.
Year after year, for 44 years, I have seen this market growing at.
Compound.
I didn't know that it is 16%. I thought it is 15%. This is a 15% country. India is a 15% country. So I have seen. I mean, like every 5 years it doubles. Like from 40,000 to 80,000, it has become in 5 years. Exact. So it's about 15%, and longer term is also 15-16%. So there is no reason to believe that going forward it will be anything significantly different. It might become 14. It might become 16. So if you go at 15, I mean, let's keep the base rate 15. In 5 years flat, 2029, you will be 1,60,000. Is that a big number, or we should double it again?
I want to just, so you take a slightly longer sweep of time, and that's the way to do it. You even out and iron out a lot of the fluctuation and volatility. And I think you put that out beautifully with that sort of example. But slightly near term, this is also the fastest 10,000 point move.
Yeah.
Now, of course, I mean, from going from 70 to 80 in percentage terms is very different from going to 10 to 20. I mean, having said that, this has come in about 130, 140 days. This last 10,000 points. So is it just your thoughts?
But you can have a deep correction up to 2,000 points, and then it will get nullified in the sense that, see, what happens is the base effect comes. See, first 10,000 to from 10,000 to 20,000 is a doubler.
Correct.
Obviously, it will take 5 years. But 70 to 80,000 is just about 14%.
15%, yes.
So 14% and 100%, it is going to take different times.
No, but the other aspect, we've been discussing this, is this whole liquidity gush, right? This massive tap of domestic liquidity, which is why this is a very different market from where we were maybe 10 years ago or 15 years ago. Does this worry you? That there's so much money chasing stocks. Is that in itself maybe a risk that people don't want to look at?
No, why worry you? It's the happiest situation in my 40 years of career.
Okay.
Yeah, it is the happiest situation. When actually retail, which is, see, in 1.4 billion people, at least we should have 500 million people in the market. We still have only 160 billion or 100 billion. So this journey of inclusive development of the markets, because the risk capital is going to come from, not from the top end of the population. Risk capital will come in a truly distributed way from across the country. And that is the revolution which is on.
Hey, thank you for watching this on CNBC TV 18. Hope you liked it. For more such interesting news and updates, follow CNBC TV 18 on all the social media platforms.